Hello, fellow traders. 'Tis I, the Rumpled One. Sunday, November the 5th, the year 2017. Let's talk trading. I've gotten some requests to talk about the weekly chart, talk about gaps and the different weekly trade zones, the rat zone, the buy zone, the wick zone. So let's get started here. First, let's look at the gap. Now, for those of you who may not know, a gap happens when the opening price is above or below the previous closing price. And so in Forex, when the market opens on Sunday, Monday, depending on where you are in the world, the price is usually anywhere from a couple to 10 or 20 pips higher or lower than the close on Friday, and that creates what's called a gap. And usually the gap fills. I think that's something like 90% of the time or more. So if you fade the gap, in other words, you trade towards the open price, usually you can pick up a few pips. So like, for example, today, the closing price of Friday was 114.04, and today's open price, if I can get this, actually the open price is right here. Let's see, nope, that was a week ago. Open price was 113.996. So that was basically maybe 4 pip difference. Not, nothing to write home about. But it's a trade. If you would have traded it and you stuck with it, you could see that you could be up about 36 pips right now. Now, of course, somebody will say, oh, that's hindsight. But no, these are trades that I've talked about. So before the market opens, you will already, as soon as it opens, I should say, you'll already know what I'm going to do. It's already there. I'm going to fade the gap. It's that simple. Now, the buy zone is usually the distance anywhere from, say, 5 to 10 pips away from the open in either direction. So if price moves up 5 or 10 pips, then I'd go long. And if it goes down 5 or 10 pips, then I'd go short. So in this case, it moved up, even more than 5 or 10 pips. So had I not even faded the gap, I could have taken the buy zone trade, and I could probably be up 30 some pips right now. So once again, it's pretty simple. And just here I've got the dashboard that is showing me that all the gaps filled. And it's telling me also where price is in relation to the wick zone. Okay, so you can see here it's crossed above the high, which is here. So it's above the previous week's candles wick zone, which would be between the high and the close, that upper wick zone. So if you would have taken the breakout trade on the wick zone, right now you'd be up about 14, maybe 15 pips here. So that's how that trade works, because we know price doesn't like to stay in wick zones. So once again, these are all simple trades. They come in the horizontal line category. And let's see here. Here's another dashboard setup, just telling how far we are from the high to close versus close to the low. And you can see right here, the market's open, it's dynamic, prices going up and down. So you can see here 1, 0 on the CAD, it's prices pushing up, making new highs. Once again, very simple stuff. Not complex, not complicated. And as you can see, no squiggly line indicators are being harmed while I'm trading. My sense of humor. Now, somebody asked about the frequency distribution. and they wanted to know about the rat zone for the weekly candles. So here I got the rat dots, and this is the 20. This normally that's what we use for the daily, but you can see that it would also pretty much work for the weekly, because the frequency distribution high to close or close to low, you can see you know it's almost 50-50 chance it's going to be over 100. You know, it's over about 50%. It's going to be over 90. So once again, if you enter a rat zone, or rather, a rat zone trade on the weekly, you get within 20 pips of the current weekly bottom and price starts to reverse out of it, you could definitely have a nice winning trade. And of course, you know, price could it could go against you. So if you think the weekly price is reversing off a weekly low, you definitely want to get, if you get in within 20 pips of that weekly low, you can see you've got a pretty high percentage that it's going to go above it. Because in other words, 7% of the time, price is going to close between 0 and 9 pips of the low. 6% of the time between 10 and 19. So you add those two together, so that's about 13% of the time it's going to close less than 20% from the low. So basically that's telling you, well, if it's only doing that 13% of the time, well then what, 87% of the time it's going to be 20 or greater when you add up all of these numbers. Yeah, I think that's not bad odds to reverse out of those zones if you see it failing to make new lows or new highs. Because here, high to close, you know, would you start going short? Well, let's see. 8% of the time on this dollar yen over the last 100 weeks. Now, this is 100 weeks. Over the last 100 weeks, it only closed within, you know, 0 to 19 pips 8% of the time. And so you can just look at these wicks here. You see these red dots at the top and the green ones at the bottom, red rat, green rat zones. You can see, and this is the current week, so we're not really paying attention to that because, you know, we still have got, what, 5.5 days or 4.5 days of trading time. But if you look here, and you can just see pretty much how price reverses. But what, 1, 2, 3 weeks ago it didn't. It stayed within that 20 pips. So there wasn't a reversal here. But in most of these other ones, you can see a pretty nice reversal. And also off the bottom, here's one that didn't get out of the zone. But if you would have held on, you can see next week it took off. So, you know, they wanted to know how to use these frequency distributions. Oh yeah, and this is, it's been a while. Okay, yeah, this is a TRO 2013 donational, way back when. But still good, still works. And then here we just have just the plain old chart using TRO HL5 indicator. We can see the previous week's high, the current week's high, and previous low. The problem is with the weekly candles, I can't expand it, so these numbers kind of get jumbled on top of each other. But what we could do is we could just use, one bar and we could shift it. Just use the previous week. And so once again, you can see here it broke out of the upper wick zone, and it so far it's continuing. So that's pretty much it, fellow traders. Simple stuff, really is. That's pretty much what you need to know about weeklies. You know, feel free if you have any questions. You know how to get a hold of me. And as always, fellow traders, it's not what you trade, it's how you trade it. TheRumpledOne signing off.